So I work for Greenland Re, and we're based in the Cayman Islands. And what we do is, provide both reinsurance capacity and invest in Insurtech. So we're basically founded in 2004. The images aren't that great, but publicly traded on the Nasdaq, and headquartered in the Cayman Islands, Dublin, and we have an office in London. So we have three strategic pillars to our company. One is the open market underwriting, which is really reinsurance capacity, where we do a lot of brokered deals. And then we have an investment arm, which is a hedge fund based in New York by the same name, called Greenlight Capital. And this is really like regular investing on the stock market. And my main interest is the innovation, which is the middle part, and where we leverage our investments into early stage startups, and at the same time provide them with insurance capacity. So this is where I'm going to focus today. So we think we're uniquely positioned in the market. Small team, quite nimble, but we use a lot of levers to provide capacity to this ecosystem. So we tend to be a minority investor. Average check size is between 50 to 5 billion, co-lead or follow, then we are geography and mostly. But alongside the investment, we leverage three of our balance sheet papers. So we have the reinsurance paper, both in Cayman and in Ireland, about $600 million of surplus, where we can sit behind insurance company to provide that capacity. 2022, we opened a Lloyd's syndicate, which now gives us access to a worldwide paper where we've been actually able to launch a lot of insurance products with Insurtech as the main insurer. And then this year we've opened a captive parent based in the Cayman Islands, and we allow a lot of our partner Insurtech to take their own risk under us with opening captive sales, which is a much cheaper and streamlined model for that, without them having to open their own captive. So this whole structure is actually by design to be able to provide a full service to a lot of our partners. So the slides are a little bit off, but there's a lot of strategic benefits for us. So reinsurance companies, obviously, there's some really large ones, as you know, Swiss Re, Munich Re, lots of balance sheet. Our balance sheet is only $600-700 million. So what has this structure of innovation has allowed us to do is it gives us differentiated access to certain markets, very low volatility business, new geographies that we otherwise wouldn't have access to. And we tend to have much better counterparty relationships in our companies because this is not brokered, right? So it's very direct relationships. So there's a lot of high transparency, and our position in the market, is pretty good now because being able to develop this reputation as a very innovative reinsurer. And of course, with the investment, so we have certain themes. I'm not gonna go through all of those, but we really like very niche segment and products, and I'll talk about that a little bit. We value profitability, of course, as an insurer, and that's how we'll get charged for our results. And we tend to really, support innovators and startups that are very automated, have a machine learning and AI. So what's our selection criteria? Because this is the key, right? Otherwise, we'll be giving capacity to pretty much everyone. So we like people who are sort of have shown market leadership potential, right? In very growing markets, and they tend to have a moat, like a sustainable advantage. And we like to look at businesses that are already validated, and because we look at it a lot from a unit economic perspective. But the key and overlying theme above all, they're really an outstanding team, leadership team, and then we look to scale them. So we're a team of 9. 5 on the investment, 4 on the underwriting, soon to be 5 on the underwriting. With a very diverse background, a few of us are actuaries, and then we have people who are underwriters and some investment professionals. So I lead the underwriting team. And, what we've done is we don't do it alone. It's only 9 of us, but we've built a huge network across the board. So we have carriers. So when one of our partners is an insurance company, we have them. We have reinsurers. We have other Lloyd's syndicates. But the biggest source of business flow for us is actually other co-investors. And at the same time as other accelerators, especially in Lloyd's now. So this is the network that we've built for ourselves to be able to kind of expand and over-leverage ourselves. So we have a huge deal flow as a result. So we've looked at over 2,000 opportunities. A lot of companies have gone through that due diligence, and so far we are at 42 portfolio companies. We started in 2018 with 5 investments, have been making about 7, 12. Last year we made 11. And last but not least, what I want to talk about is the last slide, please. So you can see that our portfolio is quite diverse. We do battery health, cargo delay, vacation rental, travel, and then we also have some established products. It's commercial insurance, workers' comp, and construction, financial. So that's really us. If anybody has any questions, please